Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about metals, past, present and potential future price movements. My name is Sasha and I'm a financial analyst from the research department at Fortrade. If you have any questions, please call us and ask to speak to a senior account manager who will be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. So first off, we'd like to introduce you to what we call a market opportunity. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. This can relate to daily trading, weekly trading, or monthly trading. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand it's solely your decision whether you trade on market opportunities or not. Here is an example of a market opportunity. You can see fundamental analysis on what's going on with the euro-dollar currency pair. You can see this is a downtrend opportunity over a weekly period, since our analysis suggests the euro would decline in value against the dollar. At the top, you can see some geopolitical events and fundamental analysis that can influence the euro-dollar currency pair. For example, the part on the situation in Italy, which has affected the euro. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. If the price reaches 1.1381 that you can see on the left-hand side of the screen here, this shows the right moment in our estimation for opening a trading position. That's how you decided to trade on this opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further down. At these points you can put a stop loss and take profit, and on the right-hand side of the screen you have calculations. If you close the position using take profit, you can expect these kinds of profits at the support levels in green. If the price is going against you, you can potentially have a loss of the amount at the resistance levels in red. So, there are many metals which are available to trade with, whether it's silver, palladium, the safe haven gold, or precious platinum. There is something for everybody, no matter what your trading strategy. Gold and silver falls into the safe haven category, with gold considered the safest. Platinum and palladium are considered riskier instruments, but come with greater rewards. So let's begin with the hottest metal first, palladium. Palladium is the star performer, and many traders have traded successfully on it this year. Although considered a risky investment for many investors, palladium has become a no-brainer as the metal has soared to all-time highs. Palladium is used in electronics and industrial products, but the main price driver for the metal is its use in catalytic converters, which reduces pollution in cars. This means that higher palladium prices are dependent on a solid economy where demand for cars is higher. Palladium is 30 times more rare than gold, and this rarity also affects its price on markets. Another thing to bear in mind is that as more countries increase environmental regulations for pollution, the demand for palladium will increase. Most palladium is mined in Russia, South Africa, and the US. Its rarity means that strikes in South Africa, and there have been some this year, pushes prices up. Like palladium, platinum is used in electronics and catalytic converters, but platinum isn't as strong or long-lasting as palladium. Platinum converters are used mainly in diesel cars. As diesel cars become more unpopular in some markets due to environmental concerns, platinum can come under pressure. On the other hand, since palladium prices have grown to all-time highs, as a result, catalytic converter manufacturers tend to use platinum more as a cheaper alternative. Platinum is 15 to 20 times more rare than gold. Platinum is highly dependent on South Africa, which produces 80% of the world's supply. This means that the industrial action that I was talking about in South Africa sharply supports higher prices in platinum. And of course, platinum is frequently used in jewelry. Silver is a precious metal used in jewelry and electronics. It's also traded as a safe haven asset, but it's not considered as safe as gold. Unlike gold, silver is used in consumer products and thus can also go up when the economy is doing well, not just in times of geopolitical instability as a safe haven. Silver also often reacts to the overall market. Gold is mainly traded upon as a safe haven asset in times of geopolitical instability, conflict, or terrorist attacks, or mass protests, for example. One can expect gold to find buyers, pushing prices up. Gold does well in periods of low interest rates in the US. The metal, like others, are calculated in dollars, but gold tends to benefit the most from this. Since bullion is not an interest-yielding asset, it becomes more attractive to investors who may have decided to move their money from their bank accounts into gold. Gold is one of the most famous valuable metals used in jewelry in countries like India in particular. Before we take a look at each metal's performance, it's worth remembering that each instrument has done very well since the beginning of the year. So let's take a look at how these metals have been performing. The unquestioned star performer palladium has skyrocketed by some 43% from January the 1st to the beginning of November. Palladium prices have fallen a bit since then, but it's still up over 40%. And as you can see so far this year, all the dips have been followed by higher highs. Palladium has smashed through so many all-time highs this year that investors have lost count of the amount of times this has happened. With this kind of success, who doesn't want a piece of palladium? Platinum is currently up by 10% since January the 1st, but it was up by almost 25% in September before dropping back. Platinum hasn't had the success of palladium, but since the beginning of the year there have been plenty of opportunities to take advantage of the metal's rising price. Silver has also soared higher this year, skyrocketing 26.35% from January to early September, before falling back, and is now up just over 10% since the beginning of the year. Although the metal has performed well, many analysts believe that silver's time to shine will come soon. The other big story of the year in metals has been the performance of safe haven gold. The safety-first reputation of gold has not stopped the precious metal from being a top performer. From January 1st to September, gold jumped over 21%. It's currently trading nearly 15% higher than the beginning of the year. So will metal surge to new highs? This is the million-dollar question. It's been an excellent year for metal so far. Earlier this year, Reuters successfully predicted that palladium would hit record highs. But in recent weeks, they have become more conservative, stating that they expect palladium to hit $2,000, but only over the next 12 months or so. Much depends on the length of the trade war. One of the main drivers for palladium is demand for cars in China. If China is severely impacted by a long-term trade war, palladium could fall. However, in the short term, there will be plenty of opportunities to trade on the metal, perhaps by using a dip buying strategy. After all, analysts agree there is still a shortage of palladium in the markets. On the other hand, platinum may benefit from a high palladium price, as catalytic converter producers decide that palladium is too expensive and choose to produce palladium ones instead. Analysts believe that silver prices could also benefit on higher industrial demand. So this is essentially a trade war trade. If talks go well, silver could break higher. But silver will also be insulated by its safe haven status and low interest rates. Many traders are bullish on gold prices. US interest rates are currently at an 18-month low. Gold prices are also being supported by the trade war and geopolitical instability, particularly if you feel as if the trade war won't end anytime soon. Protests in Hong Kong and now both in Iran and Iraq make the precious metal an attractive prospect at the moment. Well, I hope that you found this webinar useful. Of course, that we at FourTrade will be following developments related to any metal that is available on our platform. Please get in touch with your senior account manager for further information. Until next time, goodbye, and please join us at FourTrade again soon.